Welcome back, everyone. Uh, I am privileged and honored to be your first host here on Track A. Again, for those of you just tuning in, I'm Scott Zimmerman, aka you see my name on the board of Z Track. It's a nickname that was given to me many moons ago. And we'll get to that. You guys are stuck with me for the course of the next couple days. So I'm not going to spend a bunch of time talking about me, but I'm super excited about Taxation is Theft Fest. This is such an exciting opportunity for us to get to know some activists and people that are making a big difference, out there for us and informing individuals. I'm very excited to welcome our very first speaker of the day, Mr. Marc Tancer. Marc has founded the Lafayette College Libertarians in 2009. He's had several leadership positions within the Libertarian Party there in the Palm Beach affiliate. Served for a 4-year term as after elected to the Palm Beach Soil and Water Conservation District Board of Supervisors. He's also been working in coins and precious metals industries for the last 9 years. He has his own firm, Taggart Trading, for half of that time that he's been involved. Marc is going to bring us some great information. I'm super excited to have you here with us today. Marc, welcome.
It's great to be here. Thanks for having me.
Yeah, thanks. We're looking forward to everything you have to say, Marc. I am with you that inflation is theft. It is. So go ahead and tell us more about that, and I'll turn over the floor to you.
Yes, thank you so much. I did want to start off by just mentioning that taxation itself is than theft. Taxation is really extortion or armed robbery or something. Inflation can really be accurately described as theft because theft is more, I don't want to say secretive, but not as much in your face as armed robbery or extortion is. So inflation really, but taxation is armed robbery or taxation is extortion isn't as alliterative or as snappy. So I do like the taxation is theft motto. But anyway, first I would say that not all inflation necessarily is theft. It's specifically government-induced inflation, but we'll get to that in probably about 20 minutes or so. First, and by the way, just so everybody knows, we will spend a little bit of time actually showing you coins and paper money from the USA and a little bit from other countries from the last couple hundred years, just to show some examples of the different types of banknotes that I'm going to be addressing, and to show examples of market-based money, even though it's government-struck, but market-based money circulating as currency and as money. So, first of all, real quick, we will go over what is money. Money is originally from the marketplace, and money is a store of value, it's a medium of exchange, and it's a unit of account. If one thing fits all three of those characteristics, it is money. What is currency? Currency doesn't have to be money, but it typically is, and currency is what circulates to actually trade for goods and services, which money is generally the best currency in my opinion. But anyway, just looking at my notes here, gathering my thoughts. Okay, so first of all, we know that markets did run money for quite a while, and then governments did, have gotten involved here and there back in the, ancient times, just to give the king a monopoly on money. They put his face on it. Anybody who counterfeit it would be put to death. So there were some kind of legitimate reasons for the state to be involved, even though the state didn't need to be involved. It wasn't all for bad purposes per se, although they always ended up debasing their currency by putting in base metals and continuing to force people to circulate those same coins at their face value with less actual precious metals content, enabling the government or the kings to actually spend more than they can collect in taxes, which, by the way, is exactly what we have going on now. So, quick overview of paper money history. So back, a few hundred years ago, I mean, it goes back further than that, but you had merchants trading stuff, and you had people in all these towns, and they were trading metals, but for sake of safety and safekeeping, a lot of people started keeping their precious metals in warehouses. oftentimes of the town or the city metal blacksmith, or people who worked with metals, silversmith. They would oftentimes have vaults and safe places to keep their people's specie, people's gold and silver, and any other money or currency that they had. So these warehouses would give out warehouse receipts. These warehouse receipts, at least at first, were 100% backed by the metal on deposit in that warehouse. And if you ever did want to redeem the warehouse certificate, you can go and turn in the warehouse certificate, get your real money, and you might have to pay a small storage fee either upfront or upon redemption. But eventually people started accepting these warehouse certificates as if they were money or as if they were currency in themselves, because people trusted the warehouser to actually have the metal, in their vaults. So that is kind of the beginning of what I would call modern paper money. There are a couple ways to cheat this system. Well, one way to cheat it and one way to act honestly, but some people would view it as cheating. You have some nefarious or some less than upstanding warehousers actually starting to issue more warehouse receipts than they had specie in their vaults. This would be definitely fraud under any circumstance, because a warehouse certificate, by definition, is something that is 100% backed by metal in the vaults or by whatever the asset promises to pay in the vaults. So that was certainly an issue, that there were some warehousers who would start to issue more warehouse certificates than money in their vaults, which is fraud, and people are always going to commit fraud. That's unavoidable. But in a competitive market, ideally, that stuff is minimized, and we figure out who the best and most reliable people are. What they had also done is some people trusted these warehouses so much that they were willing to lend gold and silver to the warehouses. Well, upon lending this to the warehouses, instead of giving a certificate of deposit or a warehouse certificate to the lender, they would actually give promissory notes. So the promissory notes would promise to pay you in the specie back, but it wouldn't actually guarantee that for every note that you had, that the bank actually had that money in the vault, right? They may have lent it out. Okay, so that's where we have promissory notes as a distinction from warehouse certificates, where warehouse certificates are theoretically 100% backed by metal, and promissory notes are promises to pay but not 100% backed. So there are some people who do view that latter system as fraud. Murray Rothbard actually viewed that as fraud. I don't, and many people don't. The free banking people don't. George Selgin, etc. That is the school of thought in which I am. So how that works, and it worked out great actually in the Scottish free banking experiment that lasted something like 150 years. People had deposited their money and got promissory notes back, and there was inflation in money and credit, but it was constrained to the extent that people needed to continue to trust that their bank or banks on which they were accepting notes would be able to make good on their promises. So the inflation was constrained by market forces and by banks not wanting to go out of business, and the fact that the banks in Scotland did get together for an exchange, essentially, how would you call it, a clearinghouse. At the end of the week, they'd meet to swap their metals and notes. Whoever had a larger balance of notes would turn them in, and this actually mitigated bank runs, and it worked very well. The only reason the Scottish free banking system failed was because the Bank of England came in and said you can't do it anymore. It didn't fail for market reasons. I'll get to paper money in the USA, specific examples in just a bit, but I do want to make that system analogous to what we have going on today, where you deposit cash into the bank, and due to the existence of the Federal Reserve System acting as a lender of last resort, what you have is inflation in the supply of money and credit. Has nothing to do with the free market or the market for real loanable funds. It has to do with people not caring about what the bank does with their deposits, because we have an FDIC, which it's the government guaranteeing people's deposits. And if the FDIC fails, the Fed is going to just bail them out. So there are no market forces constraining the inflation that's caused by fractional reserve banking. So in my opinion, what we have going on now, that is how inflation is theft. What happens is the supply of money and credit inflates to way more than the market would allow. And to the extent that that devalues the money in existence, or that keeps prices higher than they otherwise would be, that's stealing from people who are trying to save in dollars and other safe assets. And it steals from workers whose wages don't rise commensurately to the price difference that this expansion in money and supply causes. I hope that was understandable to everybody. I know I went a little quick, but I do want to show you some specific examples from the U.S. And the U.S. federal government did not actually start out with warehouse certificates like gold certificates and silver certificates. They actually started out with garbage paper money, with what we call legal tender notes. They were nicknamed in the 1860s greenbacks. They had legal tender status so that they were required to be accepted at par. However, the marketplace, a lot of times people didn't even accept them at par or accepted gold and silver at a premium. And either way, it was the government trying to fund the war between the states. They needed to come up with money and they didn't have the gold or silver. So, of course, they started printing money. I don't have any quote-unquote greenbacks, legal tender notes from the 1860s, but I do have other legal tender notes from later on, from 1907 and 1917. So these are the same kind of notes that they would have issued during the war between the states. Not necessarily the same designs, but the same concept. So this is George Washington on it. That's the back. It's called a Sawhorse Note, and it reads right on it, this note is a legal tender for $1. It says right on the top there. And it does say also on the front of the note, we'll pay to the bearer on demand $1. It will pay to the bearer on demand, so it's a promissory note, but it's not actually a warehouse certificate. It's not actually guaranteeing that when you show up that the government or the bank will have that money. It's a promise, but not a certificate. Same thing with this $2 legal tender note with Jefferson on it. And kind of cool, we call that a bracelet back because of that pattern on the back. That's also Series 1917. And then from a little bit before that, Series 1907, we call this a wood chopper. It is also just a legal tender note. It's essentially the Treasury printing money and saying this is legal tender. If you wanted to, you could call legal tender notes true socialist money. Some people who want to eliminate the Federal Reserve and turn the money printing over to Congress, paper money printing to Congress, that would be exactly what legal tender notes are. All legal tender notes, including the smaller sizes in the 1930s and 1950s and 60s, they are still legal tender. You can circulate them next to Federal Reserve notes. They're still promissory notes, but if you go to the Treasury, they're just going to give you a Federal Reserve note in exchange. So it's not actually promising to pay anything real. So the Treasury did start issuing legal tender notes during the war between the states in order to fund the war effort. Of course, that caused some inflation. After the war, a few years later, I believe in 1873 or so, the Congress actually passed the Redemption Act, signed by the president, and they had actually gone back to the gold standard, which was really cool. And they fixed the price of gold at $20.67 an ounce, which is where it stayed up until not only 1913 when the Federal Reserve was created, but 1933 when the gold was called, 1934 when 1933 when the gold was called back by FDR's executive order. Where was I? What I do have in my hand was actually gold and silver certificates issued at that time. This is considered one of the most beautiful notes ever issued by the U.S. Treasury, and it's a silver certificate, a Series 1896 $1 silver certificate called the Educational Series. You have Lady Liberty educating a boy, and there's the Constitution to which she's pointing. So it's actually a really, really cool, beautiful note, and it says right on it, as well as this gold certificate, as well as this other silver certificate from 1891, I believe. They say right on it, this certifies that there have been deposited in the Treasury of the United States $1 silver payable to the bearer on demand. So as opposed to the promissory notes, which promise to pay real money but don't certify that there's that money in the warehouse, The silver certificates and gold certificates actually are certifying that there's been money deposited. So the silver certificates and gold certificates don't really give the state much power, except to the extent that they might cheat it, which can always be negated by people choosing to run on the Treasury to try to get their metal back. To the extent it benefits government, it's just to more legitimize government, get their name and faces out more. But it's essentially government version of market-based money, which is kind of cool. And they're not inflationary. They're just certificates saying that you have a 100% claim to a piece of metal in the government warehouse. Excuse me. So, I've been talking to some people recently, and I have one friend who actually supports the Federal Reserve System. He believes that it's actually created, or at least has not disturbed, all the great wealth that's been created in the 20th century, in the 1900s, in the United States of America. He thinks it either accounts for the fact that we're the strongest country or that it hasn't hurt. I will get into how it's hurt, but first I do want to give a counterexample. I had mentioned the Gold Redemption Act in 1873. So the 1870s, we saw a steady decrease in consumer prices, and economists in the mid-1900s were thinking that this was a horrible time for the United States of America. They thought the people were starving. They thought the economy was really bad because there was a slow deflation in prices. In reality, what happened was production was getting more efficient because we were going through the Industrial Revolution, and we had a dollar that was fixed at $20.67 per ounce of gold. What did that do? That as things were becoming more efficient and more abundant to be produced, it was enabling the common person with their same nominal wages to be able to purchase more. This is a good thing, and this is how wealth in society is created. A slow decrease in the price, even if there's a slow increase in base money, because there is gold mined every year, but it takes a lot of effort to mine gold. It doesn't take any effort to run a printing press. So the fact that the supply of base money, gold, was the increase was constrained every year, and the heavy increases in technological advances and efficiency were causing prices overall to go down slowly. This is the opposite of theft. This is everybody benefiting from the free market and from productive activity. This is absolutely heroic. So what we have going on now, we still have tons and tons and tons of productive activity and tons of efficiency, which absent a Federal Reserve System, absent a paper money central bank, we would probably be seeing consumer prices go down immensely. We currently see the Bureau of Labor Statistics run through the Treasury, put out inflation numbers every year, sometimes 1%, sometimes 2 or 3%. They're counting the change in the consumer price index or the change in the PCE, personal consumption expenditure. These are very arbitrary figures to begin with, the CPI and PCE. They're statistics put together by statisticians that have an incentive to, or that work for a bureaucracy that has an incentive to understate the actual inflation. If we considered inflation not only the increase in year-to-year prices, but the actual increase in price from price to the next year compared to how it would have been absent this monetary inflation and the protection we give to the financial sector, we might be seeing prices go down several percentage points every year. And everybody would be better off, almost everybody would be better off. Certainly workers would be better off. The only people who wouldn't be better off are the people who currently benefit from the existence of the financial sector as it exists. The people who are really into it, the people that have boatloads of capital and can make money off directing capital, not necessarily toward where it is most productive according to consumer preferences and scarcity, but according to where it will perform the best due to the protection of the financial industry. So that in itself, I view as a massive theft from the American people and from workers and from producers, from honest producers. And in addition, of course, just like the kings in the past, debasing the current coinage, by the state inflating, what it enables them to do is spend more than they otherwise could, which actually ends up taking out real resources, real land, real labor, and real capital from the economy, taking them away from producers, people producing stuff that consumers want and need, and taking them away from consumers themselves. So it allows the states to run the wars. It allows the states to run the welfare state. It allows the state to get involved in way more than they otherwise would. So if you philosophically don't like the state for any given reason, you shouldn't like the central bank or the inflationary paper money. Let me get back to my notes here. So what we have going on right now in May 2020, the Federal Reserve's balance sheet is actually up to $6.9 something trillion. Now, the Fed's balance sheet is a technical term. It includes all of the assets that the Federal Reserve System owns. Almost the entire amount is the base money that they have issued into the banking system. A very small amount is the Federal Reserve Bank buildings and computers and, physical assets and whatnot. But almost that entire amount is base money in the banking system that the banks can fractionally reserve, lend out to people needing loans. The balance sheet is now 6.9 something trillion, and that is up from about 3.4 trillion going back about a year ago. The Fed's balance sheet has blown up over the past year, especially over the past few months. What is that going to mean for consumer prices? We don't know. We don't know to what extent that new liquidity in the banking system is going to affect commodity prices and hence consumer prices. What we do know is that the dollar still serves as the reserve currency of the world, which allows our government to get away with all this inflation without showing tons and tons of price increases to us. Again, without the monetary inflation, we'd still have price decreases, so we still have that theft that we need to consider. But anyway, going back to 2008, prior to the financial crisis, the Federal Reserve's balance sheet was less than $800 billion. And then it blew up after QE1, QE2, QE3 to as high as about 4.2 or 4.4 trillion. Then over the course of 4 years or so, they had slowly decreased the balance sheet by a few $100 billion down to about 3.6. Then a year ago, approximately, they started in June, they started increasing the balance sheet again slowly, which has been blowing up lately between the mostly using COVID-19 as an excuse, because the money printing is not going to help anybody other than the people in the financial sector who want to keep their financial asset prices propped up so that they don't take losses, and also so that the regular people who have actually saved and been responsible are prevented from actually buying that stuff up during a severe crash, which they're trying their best to prevent. So inflation is theft in many ways. It robs wage earners of their purchasing power. It robs the economy of real resources because the government gets to take more land, labor, and capital than the tax revenue that they earn would suggest that they have a right to take. I think one more main point that I did want to make is that a friend that I've been talking to who justifies the existence of the Fed, he says that, well, the dollar is only a currency, it's not money. Well, I agree with him, but he suggests that I suppose that everybody should just be smart enough to understand this, and people should just go into the financial sector. He has no problem with government using force to have a monopoly on the supply of money, and their exercise of that monopoly forcing people to go into speculation. He has no problem with that. I have a big problem with that. Most people, including myself, by the way, don't really belong in speculation. There's no reason we shouldn't be allowed to accumulate precious metals coins or other investments to protect ourselves from the inflationary dollar. However, the reality is that we have capital gains tax on precious metals, just like on any other asset. And in fact, the collectible capital gains tax, which is what the IRS alleges gains in precious metals is subject to, is something like 28% rather than the typical 15 or 20% of regular capital gains tax. In addition, you have states. Many states charge sales tax on gold and silver, coin and bullion these days, which makes it so that gold and silver cannot compete with the dollar fairly. They can only compete with the burdens of having all this taxation on them. So people can't even choose to protect themselves from an inflationary dollar without going into something that is subject to tax. So no matter how you try to address the issue under our current system as an individual, the government is going to try to screw you and try to steal from you one way or another. There's no, unfortunately, there's no way to save without speculation, because saving in dollars is saving a depreciating asset. So we don't have a good system. We have tons of theft by the people at the top, the people in DC, the people who get to work for the government bureaucracies, and of course for the financial sector and other favorite industries such as education, healthcare, military, of course. Anyway, I'm going to check my notes to see if there were any other points that I wanted to make. I think that was everything. Let me check to see if I had any other paper money. Those are the main paper money things that I did want to mention, but if we had any questions, I'd be certainly happy to field them. I do have a couple Confederate banknotes that I will show. I could intersperse them. If we do have any questions now, let's take them, and I can come up with a couple more things in a minute.
So we haven't seen a lot of questions start popping up on the thread just yet, Mark. Thank you so much, by the way. You're very, very informative. Obviously, know a lot about what we're talking about here. And from a layman perspective, from me sitting here listening to you talk, I was like kind of nodding my head and going, "Oh yeah, that makes sense." Like now, I kind of see the correlation between the impact of how the government's handling of the finances has impacted consumerism, for lack of a better term. So it's really interesting to see that come up. One of the questions that did come up was just somebody asked about nano cryptocurrencies and cryptocurrencies. Talk to me a little bit about that. When you talk about something that's not really backed by true value, I think a lot of people are hesitant to get into like the crypto world. Do you have any insights into that?
I am not pro or anti-crypto. I've gone to the Porcupine Freedom Festival the last 5 years, and I will be attending in about a month, a smaller Porcupine Freedom Festival, but I certainly learned tons from my friends and from fellow libertarians at PorcFest about crypto. Here's my thing. If it works the way they say it works, I think it has a lot of promise for the future. Allegedly, it works the way they say it does, and if it hadn't, people say, well, it would have already been hacked, it would have the blockchain would have already been interfered with, whatever, and allegedly it's never happened. I'm not tech savvy enough to understand it, but I'm not tech savvy enough to understand the computers in the actual banking system itself. What I can say about crypto is that if it works the way they say it does, the only disadvantage it has to the modern banking system is lack of widespread acceptance. It shares several common problems with the modern banking system, such as needing an internet connection and electricity. And it's much better than the modern banking system to the extent that the blockchain is allegedly unchangeable. Once it's formed, that's it. There's a permanent ledger. You can't have people go in and change it after the fact. Maybe if you have a 50% plus one node attack, that might be possible, but the amount of energy that it would take to actually attempt to hack like that they might not even know would work would be such a huge amount of energy that the only entity that would ever do that would be governments and central banks, and even they wouldn't be guaranteed to be able to make it work. So there's no doubt that crypto is better than the current banking system, except to the extent that it lacks widespread acceptance. There's some retailers here and there who accept it. I know even Peter Schiff, a fellow metals dealer and a fellow economist, his gold firm does take crypto or Bitcoin, but he doesn't actually accept the Bitcoin. He does BitPay, so he still accepts dollars, but he's getting paid. People are paying him in Bitcoin, and then it gets changed right into dollars before he sees it. So that's not a pure, really crypto or Bitcoin transaction, in my opinion. But it is a step in the right direction, I suppose. I think crypto is very promising, crypto and the blockchain in general. We've had Patrick Byrne at PorcFest a couple times talk about blockchain voting and blockchain financial records and blockchain land deeding, land titling. I think it's great. And I think to the extent that it's a Hayekian experiment in competing currencies, I'm a huge supporter.
It's great. One of the things we talk about when you talk about, and again, ladies and gentlemen, if you or however you identify, I guess I don't need to categorize you. I'm from the old school, right? So I still kind of catch myself. Cats and kittens and whatever you identify as. If you have questions for Mark, please go ahead and post them in the chat here on YouTube or on the Facebook, and we can get those answered. I want to talk a little bit about the impact that, or when the shift from a metals-based currency to where we're at today, where it's just essentially an arbitrary number. What impact on our economy has consumer confidence been as far as facilitating that transition to trusting the Federal Reserve to print a dollar that has a value?
I'm glad you asked that, and it'll link into something you mentioned a few minutes ago, that being the word consumerism. So what the Federal Reserve does, not even in its daily actions in manipulating the federal funds rate, which is the only short-term interest rate it actually has essentially total control over, its existence gives undue confidence to the financial sector. What it does, it drives decision-making it exacerbates the very decision making that would lead to bank runs and that would lead to booms and busts. It actually accentuates that behavior. The fact that the Fed is there, they could prevent a bank run because they'll just print the money. But the bank runs are not damaging only because depositors lose money and because banks fail. But banks fail and depositors lose money is just one effect of them. Part of it is the economic distortions that are created while all the artificial money and credit expansion is going on. All of that does is misdirects resources. We know it enables the state to go after more land, labor, and capital because they get more revenue or they get more money simply by getting to lend treasury bonds into the market, which will be absorbed because the Fed is there and the Fed is going to eventually print money to buy them. So it enables the government to take more resources. But what it also does, interest rates are supposed to be a signal in the economy. If interest rates are too high, it means there's not enough savings. In a free market, free banking, for example, or strict gold standard with no government protections, high interest rates would reflect that the economy needs more savings. They need consumers to defer their consumption so that producers can borrow and invest in the future. Okay. What we have, and when interest rates are very low set by the market, it's because there's more savings that's needed given the current demand for loanable funds by producers that are trying to produce for the future, and it's going to maybe discourage savings or make it so that if you don't save, there could be a little less savings in the economy. Interest rates would go up. It would reward savers. What we have instead with the Federal Reserve is by fixing interest rates below the market rate, you actually have both not only discourage savings because the low interest rates will actually cause inflation. You're making it less able for people to save, and you're also making it less attractive for people to save because they'd rather go into speculative assets, right? And that's one of the stated goals of the Federal Reserve back in 2009, 10, 11. They may have had 10 or 20 stated reasons as to why they were doing all the monetary inflation, and one of many of them was to explicitly, I'm not lying, discourage people from saving cash and encourage them to take that cash, go into financial markets, bid up financial asset prices so that there would be higher value of asset prices against which to borrow money, against which to use as leverage, which would create a wealth effect. Well, we've seen it completely failed. And we knew it. Peter Schiff knew it from the beginning. I knew it from the beginning. You can't build an economy based on a wealth effect. You can only build it based on savings and production. So we have that. And we have consumers, instead of not saving, they're grasping for financial resources, but they're also going to consume more in the short term. They have easy credit, which means more people are going to be going to get an education that they can't actually afford because the credit is there. The banks are going to lend. Auto loans, you have 7 or even 8-year auto loans. This is crazy. This is insanity. This is only created because of crazy low artificial interest rate, near zero interest rate policy, negative interest rate policy when you consider the real interest rate is the nominal rate minus whatever the real inflation rate is. So you're actually having essentially more or less paying people to borrow to consume, whether that's to buy a car or just run up their credit cards on vacations or lavish things, doesn't matter. So the marketplace actually confines consumerism to the intersection of consumer preferences and the structure of the economy based on what it's producing, and scarcity. What the Federal Reserve and manipulation of interest rates does, it tries to pretend, or it makes it so that people don't realize that there is scarcity, because interest rates would skyrocket if things started getting out of hand, like all these buildings were being made, and like in 2005, 2006, all this commercial and residential real estate. Well, at some point, the credit would have dried up if there was no Federal Reserve System, and if there was no fractional reserve banking system being backed by a lender of last resort. So you have pedal to the metal on both consumers and investors building stuff for the future, and consumers purchasing stuff now. They're all grasping for the same resources. Interest rates are supposed to coordinate that over time, but fake interest rates as set by the Fed and as backed up by them as a lender of last resort eliminate that mechanism entirely, eliminate that beautiful harmony. Interest rates in a free market are amongst the most beautiful harmonies in all of free market economic thinking. It really is stunning when you've read about it and do a lot of thinking about it. It's the most beautiful harmony I've ever seen.
That's great. There was a question that came in through the chat here that you may have already answered. What criticisms would you have of Bitcoin other than acceptance?
I mean, lack of widespread acceptance is the only disadvantage that it has, in my mind. Specific criticisms, I'm not going to be one of those people to criticize Mt. Gox and other third-party services that were hacked. Well, I never knew much about crypto or Bitcoin, but I knew that one of the great things is that you can have a private wallet that's allegedly not hackable, or it's only hackable if you give people your private key, or if you leave your piece of paper, your key somewhere. But as long as you control it, you control your Bitcoin, which I think is wonderful. A lot of people criticize the third parties that get hacked and whatnot, but that's not an indictment of cryptocurrency or Bitcoin. That's an indictment of doing something out of convenience, such as going onto an exchange wallet, which is certainly convenience for day trading, but it defeats one of the main purposes, in my mind, of cryptocurrency, right? Not that crypto was ever necessarily going to be private, but it was certainly going to be, untraceable to the extent that you don't associate your name with your wallet and your payments with shipments to addresses, etc., right? So you can have it private if you want. I don't know computers and programming, and I don't know how ones and zeros and logic gates and electrical impulses show what we have going on the screen now. I get that there's levels of programming, but I have no idea how they interact with each other and how we see it, what we see on the screen. So I can't criticize the technical aspect because I don't have enough of an understanding. If it works the way they say it does, I think it's wonderful. I think it's a great concept. The fact that it's asymptotically limited to 21 million Bitcoins in itself brings me back to actually one thing I meant to address before. You had asked me before. So while crypto isn't physical, so I don't think it can be money by definition. This could be a criticism. I don't think it can be money because it's not physical. It has no intrinsic value. That said, the fact that it's useful as a currency could give it value as a currency. I know it's circular logic, but that's it can't be money because it's not physical. We don't know if it's a store of value. It's certainly a unit of exchange, and currently with how wild the swings are, it's not a unit of account. But it could be if it was more stable, and it could be a store of value as well. But the fact that it was used as currency from the get-go rather than being used in the economy, and then because of its usefulness in widespread acceptance, therefore it's used as currency. That's not the case with crypto or Bitcoin. So I don't think it could ever purely be money, but it can certainly be currency, and I'm very hopeful about it, honestly, just as one of many competing currencies.
Yeah, no, I'm with you. I'm kind of on the same. The technology is really kind of foreign to me. I really don't understand how it all works, which kind of leads me into my next question, and maybe you have some insights on this. But in my lifetime, I've kind of seen a shift in mentality, and I've been around the block a couple times, and I was lucky enough to know my grandparents, and what I've seen is a shift from keeping the jar of silver buried in the backyard. to keeping the cash under the mattress, to where we're at now, to where a stack of cash almost doesn't have the value that it does, especially now in our COVID society, where you walk into places, businesses that are opening now, but they don't take cash. They won't take a federal note from you. You have to use your debit card. You have to use your credit card. You have to get into the government's. I call it the government cryptocurrency because it's not really there, right? I mean, it's all just numbers on a screen.
And it's pretty disgusting that this is the case. Now, the reality is physical cash is physically filthy and literally filthy. It's got tons of germs, I'm sure viruses, bacteria, etc. But guess what? Silver does not transmit viruses. Silver does not transmit bacteria. Silver is antimicrobial. So if we were simply using silver as currency, like we had both under the classical gold standard as well as prior to that, where there was sort of bimetallism, which I guess William Jennings Bryan was trying to get back to bimetallism in the 1890s. But either way, and we had silver coin even after the end of the classical gold standard in 1933. We had silver coin up until 1965. So, there's a long track record of silver coin being the workhorse of U.S. currency, and there's no reason we can't bring it back. I don't know to what extent they'd need to mine it every year, but there's tons of silver already out there. Some people say, oh, well, there's not enough silver to go back to currency. Well, there wouldn't be enough silver to go back to silver currency if we're going to strike silver quarters with a face value of 25 cents at the current price levels of the economy. But certainly if we fix that, prices in the economy would come plummeting down, but we wouldn't do that because that would create too much chaos. All you need to do is figure the price of silver, what it is currently or what we think it would be, maybe a little bit higher than this, maybe a lot higher, who knows. But the great thing about silver and gold, even more so, is that you don't actually need to carry a lot in order to have a lot of value. So people think, oh, under a metal standard, you need to go to the supermarket with a pocket full of jingling change. Well, if you're going to be buying, let's say, $100 worth, you can bring 5, 6, 7 silver coins, and you're there, right? If you're going just for a loaf of bread and milk, you don't even need a full ounce of silver. You bring a couple silver quarters, and you're good. So I think silver currency would work great. It doesn't transmit disease. It's antimicrobial, antibacterial, antiviral, antifungal. In addition to providing a check against the government, there's a lot more benefits to metals than just that.
Yeah, warm in my heart. I'm a silver man myself, so silver. I'm turning silver here, the silver fox, right? So we had a question from our very good friend Myra. Myra came through and she says Forbes just published an article stating that Trump and the Fed are about to crash the dollar. What are your thoughts?
So I am all for conspiracy theories and all of this. Not all conspiracy theories are true, just most of them. A little joke that I have. Here's the deal. I don't believe it. I acknowledge its possibility, but I wish if Trump was the real deal, and for all the good and bad, if Trump is independent and trying to do the right thing from the get-go, he has not done a good enough job telling us that. He might be signaling to some of his people who follow Q, or I don't even know that type of thing. Some guy allegedly in the White House. I don't follow that stuff. It could be a huge psychological operation perpetrated. I think he is the largest psychological operation ever perpetrated against the American people. I think he was put out there as somebody who's meant to be radically independent, perceived as radically independent. But I think I know he was friends with the Clintons. I would bet he still is friends with the Clintons. He has said as a businessman and as president or as presidential candidate, that he likes low interest rates. Certainly artificially low interest rates has helped his real estate empire, et cetera, et cetera. He continues to spend money like a drunken sailor, appropriated money from Congress by the Democrats in the House and the Republicans in the Senate, or prior to the last year and a half, from the Republicans in both houses. They ran up the budgets hugely, necessitating the Fed to start to inflate. Could this be all pointing in the direction that he's trying to crash the dollar for a reset? Maybe. I'm not going to say 100% no, but I just don't believe it. I think he's the same as the rest. From the beginning, I acknowledged the possibility that he was the real deal, that he was independent. I never believed it, but certainly there was a better chance that he was trying to do the right things rather than somebody like Hillary Clinton. But I didn't vote for him. I wasn't convinced, and I'm more convinced now than I ever was that my initial speculation was correct. So I hope that's what Trump is trying to do. I just don't see it.
Yeah.
And people had said, "Oh, the Fed was recently nationalized." I mean, they've effectively always been nationalized because Congress can always tell them what to do if Congress chooses to. Just Congress has essentially always kept them relatively independent. However, as long as Congress runs deficits, the Fed is going to have to continue to go into the markets and print money to buy treasuries from the market. Otherwise, interest rates are going to go up. So the Fed has never truly been independent. They've always monetized government debt in effect. What we had a month or two ago with the $2.4 trillion spending, or however much the spending was from Congress, there was something about, in addition to the 2 point something trillion, there was 4 point something trillion that apparently Congress was calling on the Fed to do, extend credit or increase their balance sheet. I don't even know. So you could say that was that direct legislation was one of the most direct things against Federal Reserve independence that we've ever had, but it wasn't literally nationalization. The New York Federal Reserve Bank is still doing their open market operations every day in New York. The other regional privately owned Federal Reserve banks are all doing their research, and they're working in the banking system. So the Fed has not been nationalized yet.
Very good. Very good. Hey, so we're coming up on the top of the hour here. I do want to get a chance here to talk to you a little bit about. Let's take this from the perspective of somebody that's just tuned in for the first time and is just hearing this information for the very first time, and now they're sold. Now they're like, okay, I want to get into precious metals. I want to invest. How does somebody get started?
Well, they call me, of course. Yes, but now me or many legitimate coin dealers around the country, we provide low premium, low spread, highly liquid gold and silver and even platinum. There are many options. In fact, I have some right here. I'm glad you mentioned that. I kind of, otherwise I probably would have forgot to show some options. I'm just going to show one kind of very standard option here. Let's see. There we go. Let's see. I'm still here. I can't. There we go. So it's not very in focus, but this is a 1/4 ounce American Gold Eagle. It's a modern bullion coin struck by the U.S. Mint. Let me try that again. No, it doesn't really focus. But anyway, it's a 1/4 ounce of pure gold in the coin. It weighs a little bit more, but it's not pure. But it is one of many examples of modern bullion coins. It says the weight right on it, 1/4 ounce fine gold. There's the Canadian coin, the Canadian Maple Leaf, the South African Krugerrand. Those are the most liquid gold bullion coins in the world. There's the American Eagle, the Canadian Maple Leaf, silver coins. There's all these different modern bullion coins. There's also older coins, such as these gold 20 francs coins. That's a France 20 francs angel. And this is a Belgian 20 francs featuring, unfortunately, Leopold, I think the second, a mass murderer, genocidal maniac. But anyway, those coins are old world gold and other older coins. They're not even weights of a troy ounce, but they tend to trade at very low premiums, and you can get small denominations for low premiums, as opposed to the modern bullion, which you can get a 1 ounce coin for a pretty low premium, commensurate to the old world gold. But typically the fractionals, you're going to pay a lot higher. So my recommendation, if you're going to go into gold and you only care about the price of gold and you don't necessarily care about bartering or shit hits the fan, that type of thing. If you only care about the price of gold, you want to buy 1 ounce gold eagles, Krugerrands, or maples. Or I should say, if you care about the price of gold and you care about the risk of the financial sector, then you want to buy 1 ounce gold coins. If you care about the price of gold, but you don't actually think the financial sector itself is going to collapse, you might consider the ETF GLD, which trades like a stock. It's an exchange-traded fund, trades just like a stock. Theoretically, 1 share of GLD represents 1/10 of an ounce of pure gold that's held in the Spider holding warehouses. I think Spider is the management company for GLD and SLV. However, one of the many great things about owning physical precious metals yourself is that you don't have counterparty risk. So if you think that there's a lot of fraud in the financial sector, you probably don't want to buy GLD or SLV. You probably want to buy the physical metal. But you call me, you call any legitimate coin dealer in the country, you send us a check, you send us a bank wire, we're in person, you give us cash. Either way, it's a very simple deal. You call me, we lock in a deal. I wait for your payment, hopefully sooner rather than later, and then I ship you the metal, usually same day, next day, whatever, receiving the payment. Unless I have to order it wholesale, it might take me a few days to get it or to drop ship it to you. But very, very simple process. You can always call me. You can always go to my website, drop a line on the contact me thing. southfloridabullion.com or taggarttrading.com will get you to that. And I give good free information. And you can see me at PorkFest. You can see me at the Libertarian Party convention. I'll be set up as a vendor at both of those places. If we do have a physical convention this year, who knows? But we will have PorkFest. I'll be set up there for sure. And you can always find me at the Libertarian Party of Florida annual convention. And I do go to a few of the big national coin shows here and there sometimes. So find me at lots of places.
That's awesome, Mark. That's awesome. Well, thank you. I appreciate all this information. It looks like we ran out of questions here in the chat. We do still have a few more minutes, so if anybody has any last minute questions they want to pop in there, we can take those. So why you were talking a little bit about the stability factor when you talk about okay, I'm considering investing in gold, I'm considering investing in silver. Let's talk a little bit about storage. You have to store the actual physical metals. Now I've seen in my lifetime, I've seen silver get buried in the backyard. I've seen silver get kept in the safe, and then I've also heard people that are paying to house silver or something along those lines. So finish up and talk to a little bit about how that process works for us as a consumer level.
Sure. As a typical consumer, of course, you can buy the exchange traded funds, as I mentioned, which has metal that's warehoused, and you're buying a share in essentially that company that manages the warehouse, more or less. You can buy physical metal, but have it stored directly by the people from whom you buy it. You can buy Perth Mint gold certificates, and I believe also the Royal Canadian Mint also has gold certificates. I'm not big on trusting governments, especially those two have Queen Elizabeth on the money. I'd really be wary of them. However, for some reason, I want to trust Perth Mint and Royal Canadian Mint. I don't know why. I think it's bizarre. But there are local depositories here in the country. I know there's one in Texas. There's one in Delaware Depository Company. I've never heard any issues with them, any defaults, any theft or any issues with that. I don't know if Brinks has their own storage, but I've heard that Brinks has never lost an ounce of gold. I don't know if that's true or not, but I would certainly trust them for transportation, if not for storage. As far as if you're going to choose to store it yourself, separate from any institution, by the way, institutions like private vault storage, I would recommend way more than I would recommend going into a safety deposit box, because guess what? All the government has to do is declare a bank holiday, or like what we have right now with COVID. So, like I'm with Wells Fargo, I don't have a safe deposit box, but one of the local Wells Fargo bank branches is physically shut. You can't go in. The others around my area you can if you schedule an appointment, whatever, but one of them completely shut down. So if you have a safe deposit box in that branch, you ain't getting your metal, you ain't getting anything else in there. Plus, there's anecdotal stories here and there of people losing, having had everything stolen from their safety deposit box. The bank allegedly doesn't know what happened. Who knows whether it was somebody else in the family who had a key, or if it was just, the bank did steal it or somebody robbed it. There's no way to know. I think there's way too much risk in a physical bank. In a regulated bank. There's private vault storage, which would be way better than a safe deposit box. Again, these other places like these depositories could be okay, Delaware Depository Company. To store it yourself, I would not particularly recommend, unless it's a small amount, a few $100 worth or something, just that you have. If you have a few guns and just a little bit of silver, yeah, if you get a gun safe for $600 at Costco, that could be okay, or a gun cabinet. But if you're going to be storing serious amounts, thousands, tens of thousands of dollars, whatever, even more, you do want to invest in security. You want to buy a good safe. You want to buy a commercially rated safe, not just a gun safe. You want to buy a jeweler's safe with a TL rating, by Underwriters Laboratory UL. And you want to have a lot of steel in it. You want to have four-way bolt work. And you want to deal with a security company, not a big box store. The security company with whom I dealt with, they were very discreet, extremely professional. Their truck does not have all over it the name of their company and that they deal in safes and security. No. It had the bare minimum letters according to Department of Transportation regulations, but they're not in the business of sales, nor are they in the business of promotion. They're in the business of security, and they treat themselves as such. They behave as such. So if you're going to keep it yourself, either buy a good safe from a security company or come up with creative places. Burying it under the ground in PVC pipes or in buckets could be okay. Creative place such as, I've never done it and I've recommended to other people to do it, so I'm not going to, but it could be a good idea for others. Something my grandmother suggested to me growing up to hide stuff from my brothers: make a fake wall outlet with 2 plugs that don't actually hook up to any electricity, but it's just a plate and it's just a little box in there. You know, it might only fit 1 or 2 rolls of silver, or I mean, a roll of gold. It would be a lot of money, but that's just one of many, many examples. I know other people have literary savings accounts, as in cash stuffed in books, as a friend of mine sometimes does. So, just ideas like that could always be considered.
That's great. Marc, you've been an amazing guest today. Thank you so much for joining us for Taxation is Theft Fest 2020. I've really enjoyed your presentation today. I've learned a lot. Selfishly, I wanted to be part of this because I'm one of those that has lost kind of faith in the Federal Reserve and the faith in my federal notes, my little dollars that are worthless.
May I get just two closing points real quick?
Yep, go ahead.
One, I apologize if earlier during the discussion I was either rambling or kind of disjointed here and there. I didn't have my presentation as laid out as I should have. But second of all, I did want to mention regarding consumerism, I did just want to say something about destruction of nature. The housing bubble and the real estate bubble, both commercial and residential, no doubt caused way more environmental damage than there otherwise would have been. And I'm not a radical green, pinko commie, right? But I do care about the environment. I boat. I fish a little bit. I'd like to go hunting one day. I do a tiny bit of camping. I care about the environment, and I don't want to see it destroyed. And what the housing market, what the real estate bubble did was destroy swaths of unused land for real estate projects that weren't actually needed in the economy. And we can thank the Federal Reserve for that.
Of course we can. So awesome, Marc. Well, thank you so much, and we appreciate your time. Ladies and gentlemen, we're going to go ahead and take a quick break. We got our next speaker coming up at the top of the hour. I was privileged enough, and I guess privileged enough is not the right answer, but I was in a meeting with this gentleman, so I know how to pronounce his last name, I think. But I've also heard it mispronounced several times. But we got Mr. Thomas Queter coming up next to speak to us, and your host, Miss Dre. She's going to be joining us as well. So stay tuned, ladies and gentlemen, and coming up for the next couple minutes, just sit back, relax, take 5, or no, at this point, take 3, and we'll see you soon. Take care.